Hi everyone, in this video we're going to talk about Pfizer Stock. The company develops, manufactures and sells health products worldwide. The company have already market cap over $200 billion, and there's news from the day. So there's two main competitors, so there's Moderna and AstraZeneca, and there's one good news that 100% of Americans that want the vaccine will have the vaccine by June. And there's Paul Ostrovsky commenting that we'll have over 300 million doses available to American public well before then. So that's a good news for pharmaceutical and biotech industry. And as usually, we start with a simple Wall Street. So following information should not consider as investment advice. The trading is happening over 40% below the site's estimated fair valuation, and also the company earnings are forecasted to grow almost 4% per year. The risks are that there's high level of debt, and also dividends that they are paying almost 4% is not well covered by earnings. There's also large one-off item impacting financial results, and also the profit margin of almost 80%, 18% are lower than the last year's 30%. And as in preview, you've seen that there's almost 50% valuation gain from 23rd of March till 1st of December. But the one-year return is 0.05%, and with those numbers not beating industry and market, and the price volatility is less than industry and less than average market volatility. So the good news is that based on the data, there's upside of over 40%. As we see in a simple Wall Street, the current price is undervalued over 40% based on its fair valuation of $65 per share. And future growth, as I said, 4% annually forecasted. Also, earnings per share are forecasted to grow. Past performance over the past 5 years, historical annual earning growth 14%. Financial health side, we see here that the debt to equity ratio is 94%. It's considered as high. So as we see, debt level a little bit decreased and equity level increased a little bit, but there's still a lot of a debt. Also, dividends that they're paying currently almost 4%. If we see here that the current payout is 96% from the earnings is paid as dividends, but the future payout is forecasted to be 50% in year 2023. Insider trading side, we see here that there's on both sides individuals that sold and bought the stocks. Top shareholders, for example, top 3 shareholders have been decreasing a little bit, not much, but for example, BlackRock almost 3%, Vanguard Group minus 1.27%, and Simply Safe Dividends scoring the dividend safety 75, considers safe. The dividend grew this year 6%, so that's average. And here we see that last 5 years it's grown 6%, and also last 20%, 7% per year. That's also average. And there's also dividend streak. It's 10 years. Earnings per share are risen and forecasted to be more than last 12 months. So next 12 month forecasted earnings per share is almost $3 per share. Our shares outstanding is decreasing, which is good, but total sales are decreased as well, so that's not good news. Return to equity is above 10%, it's 13%. And investing.com summarizing the stock for long-term investors as a strong buy. Thanks for watching this video, subscribe to the channel, like the video, and see you in a future one.